This video is going to explain exactly how I pick which stock to invest in. So for the 4 topics I'm going to cover the 10 pillars of what I use as a foundation to pick which stocks I invest in, as well as the SEC, why it's your ally, why your platform matters, as well as some tools to consider. First off, the 10 pillars. Number 1, trends in earnings growth and debt to equity ratio relative to the sector norm. This is essentially a measure of the increase in a company's income in a particular period. But it's also important to note that disappointment over slower earnings growth causes the stock price to tumble. The debt to equity ratio, however, is used to evaluate a company's financial leverage, and it's calculated by dividing a company's total liabilities, both short, long-term debt, etc., by its shareholder equity. Number 2, price to earnings ratio. This is the ratio of a company's share price to the company's earnings per share. The ratio is used for valuing companies and to find out whether they are overvalued or undervalued. To do this, you would take the current price or close price and divide it by earnings per share. Pillar number 3, you're going to look at the company's strength relative to its peers in the sector. So for this, many people factor comparisons as the earnings growth, debt to earnings ratio, price and earnings ratio, etc., compared to other companies in the same sector. Number 4 is pretty simple. It's leadership. You're going to look at the leadership of the company, the hierarchy. If there's been any leadership changes, that could cause fluctuation in price, as well as if there's any investigations going on. So pillar number 5, you're going to look at dividends. Dividends are a distribution of profits by a corporation to its shareholders. When a corporation earns a profit or a surplus, for instance, they're able to pay a portion of the profit as a dividend to its shareholders, often identified by percentage. Any amount not distributed is usually taken to be reinvested in the business, and this is often paid out quarterly or sometimes even monthly. The dividend yield is calculated by annual dividends per share divided by the current stock price. So number 6 for the pillars, I like to look at the float and the volume. The float and the volume is important because the float is essentially the shares available for public trade. And then the volume, of course, is the amount traded per day. If you get in a stock, you want to be able to get out. If there's no volume, there's no traffic going in and out of the stock, you may not be able to get out, especially if the price starts dropping. So for pillar number 7, I like to classify it as the current climate, current events going on in the world. A big example is the pandemic. Many people look towards the healthcare stocks, stuff of that nature. Having a newspaper or just looking at different news programs could be a great way to identify the current climate. Number 8, diversification of your portfolio. It is very important not to keep all your eggs in the same basket, and it's as cut and dry as that. Number 9, it's important to note your approach, the type of approach you want to pursue these stocks, and how it's relative to your total purse. This means relative to risk versus reward, conservative, moderate, speculative, whether you want to tackle something that is more of a slow gainer but safe, more moderate, or more speculative, something that's a Hail Mary. Pillar number 10 is to take into account index funds. An index fund is a mutual fund or exchange traded fund designed to follow certain preset rules so that the fund can track a specified basket of underlying investments. Mutual funds and ETFs are pretty much presets based off a specific market sector or index. You have the S&P 500, the Russell 2000, Dow Jones Industrial, the NASDAQ Composite, etc. For topic number 2, I'm going to go over the SEC, or the Securities and Exchange Commission. It's important to understand its function and why it's there and why it's your ally. The SEC has a program called EDGAR. EDGAR is the Electronic Data Gathering, Analysis, and Retrieval System. It's primary system for publicly traded companies to submit documents required under the Securities Act of 1933. It's free to use, it's on the SEC website, and it's pretty much a repository for different documents needed to learn about companies you're interested in. It's something very interesting to look at, and it's a very useful tool in your research. And there's 4 functions of the SEC. Protect all investors, especially new investors. They have certain rules in place, like the pattern day trade rule. The FINRA, Financial Industry Regulatory Authority, states that you must maintain $25,000 minimum to not be subject to the pattern day trader or PDT rule. If you have below that and you exceed 3 round trips in a 5-day period, you may be subject to a margin call. The other 3 functions of the SEC is just creating fair markets, ensuring corporate disclosure, and also enforcing the law. They do all these things by protecting investors from investment fraud, by investigating corporate misconduct, fostering fair and efficient markets, publishing corporate info, annual financial statements, quarterly reports to help make sound investments, 8Ks on current events, and also earnings reports. They can also halt trading pending news and current potential volatility. This can lead to minutes, hours, or even multiple trading days of this stock being frozen and unable to get in or out. And this is done to protect the investor. So for the 3rd topic I'm going to cover, why your platform or brokerage matters. There are 4 main reasons why I think your platform matters. Number 1, certain platforms are more mobile friendly than others. Some are more easy to use on your computer than your cell phones. Number 2 is the commission rates, commission fees incurred getting in and out of stocks. This has to be used in calculation with determining which stocks you want to get into. Certain commission fees are $0 and other commission fees could be $15, $20 in and out. And the 3rd thing would be certain platforms tend to be informative repositories, and I say this meaning it's more of a one-stop shop as far as instead of having to go to Edgar through the SEC website to see 8Ks or earnings reports, stuff of that nature, it's centrally located on the stock ticker once searched on the platform. And lastly, the 4th topic as to why your platform matters would be the charting. I'm a fan of candlestick charts, and not all platforms have candlestick charts. And lastly, the 4th topic, tools to consider. Number 1, chat rooms. Chat rooms have played a major role in my stock trading hobby over the years. There's generally a monthly price you would pay to become a part of a chat room. Chat rooms I've been a part of usually have around 800 people in it, and there's a specific syntax used, stock tickers spiking or falling or halted, pending news, breaking news, and it hyperlinks you directly to the chart. And this is nice because many people have different watch lists and are watching different things, different platforms, breaking news at different times. So being in these chat rooms makes it really easy to get in and out of trades for stocks that might be skyrocketing, to get in and out with a quick scalp or day trade. So number 2 for the tools to consider, comparing and contrasting platforms. Again, you want to look at things such as commission fees, the charting, informative repositories, as I mentioned before. These are all things to consider. Also, certain platforms have education tabs with short little videos to teach you about what is a bond, what is an option, different things like that. So taking all these things into account, if you're out and about most of the time, maybe choosing one that's more mobile friendly, or if you don't have a lot of money to trade, maybe something that has lower or no commission fees. The next tool to consider, the NASDAQ website or even Yahoo Finance. I know Yahoo Finance's section has a great way to track certain stocks, but the NASDAQ website as well has an earnings calendar. You can look up the estimated earnings per share, and when these reports are due for different companies. The next tools to consider, news and newspapers. These are great ways to stay informed with the current climate of global events or even just national events. The second to last tool to consider, Edgar. Edgar is used as that informative repository if it is not built into your platform. So it's something important to check out, and again, free to use. The last tool to consider, I would say, stock screeners. These stock screeners are important to use if you want to sort stocks by volatility, by float, by shares outstanding, to see daily volume, look at these different trends. It's also important to note that if you're interested in short selling or trading on margin, you need to take that into account. You need to think of that as well as the correlation with how much money you're working with and different commission fees of different platforms. Different platforms allow margin trading, some don't allow margin trading. And for those of you who don't know about short selling, I did a quick video on short selling, and if you want to check it out, I suggest you do so.